This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. K-State grain economist Daniel O'Brien begins the show as he discusses more information learned from the Ag Outlook Forum and how prices and exports were this week. Justin Waggoner, K-State Extension beef cattle specialist, keeps the show rolling as he talks about cattle maintenance needs after prairie fires. Ending the show is K-State meteorologist Chip Redmond as he highlights the recent precipitation and temperature swings and if there's more in our forecast. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Daniel O'Brien. Daniel, thanks for joining us today.
Thank you very much, Shelby.
Daniel, last week we talked about the USDA Ag Outlook Forum, and any more updates from that forum for us?
Yes, more specific information's come out with regard to the actual supply-demand balance sheet numbers. I think we had some acreage figures and some general price projections that we were looking at last week. But as Friday last we talked, more information then came out thereafter. And there weren't any major surprises in that other than, well, for the corn supply-demand balance sheet, again, the big issue was the acres, and that where we projected corn acres down about, for 2026, down about 4.8 million acres from previous year. Soybeans up about 3.8, so just somewhat of a trade-off. So that was the big news. But then as I kept digging through it, I found out that the U.S. yields projected at still a record, the second highest on record historically, if it holds true, 183 bushels an acre off of 94 million acres planted, 86.1 harvested million acres, 183 bushels an acre. You're coming in at about 15.755 billion bushels. Again, and that's 1.3 or so billion less than last year. And you keep following through the estimates of usage, which were pretty much unchanged, except exports down about 200 million. So you're lower by 1.3 billion bushels, exports down by about 200 million. The ending stocks figure projected below 2 billion bushels, down to 1.837 billion. So for number crunching ag market watchers and for farmers wondering about the impact of something like that, well, suddenly instead of having a projected ending stocks figure over 2 billion, 2.1, like we're projecting right now, suddenly at a record yield, 183 bushels an acre for the U.S., we're down below 2 billion bushels for ending stocks, down to 1.837 as we talked about. And if we either acreage or combination with yields, we have something lower than that. Well, suddenly, gosh, we're down to 1.5 billion bushels carry out, closer to 10% stocks to use, and looking frankly at price scenarios that would be closer to 450, 460 or higher. So we're projecting very, very strong usage and have kind of put ourselves in the mode of having momentum in use. Again, strong exports. And by the way, we had another week of that this week, and we'll talk about that in a minute. So right now, corn prices, showing some strength, but nothing outstanding. But yet we've got still strong supplies, but a little bit weaker than had been thought. Strong usage going forward, ending stocks being whittled down. Prices only projected by the USDA at $4.20, but really in somewhat of a risky position with all that usage of having any threat to the crop, bringing about something that really would justify prices 50 to 75 cents higher. So for me, that's how I view that situation for corn. And for soybeans, that's the other major balance sheet that we had gotten more information out of, I guess. Again, 85 million acres projected to be planted. Harvested down 1 million, down to 84. So again, no problems. Yields at 53 bushels an acre, again, tied for the record high that we had last year, which is fine. Nothing wrong with that other than, gosh, we're sitting in February and projecting record high yields. So that you can automatically puts us a little bit of risk if we get those numbers, especially with the high acres. 4.8 billion bushels projected on the way to 5 if you've had higher supplies. But that as it may, looking at exports to recover some from where they were the previous year, up to 1.7 billion from 1.575 in the current marketing year, and crush also to increase about another 80 or so million bushels. So again, for the typical supply demand balance sheet for soybeans, you've got all that working together. Again, pretty strong usage, a little bit of recovery in exports, record high production, 4.8 billion. But all that comes to play. You're sitting at about 355 million bushels of carryout, just slightly higher than where we were. Stocks use at 8%. But again, that's based on a second record high soybean yield year in a row. If usage holds up, and let's say we get 150 to 200 million bushels less than that, and that'd be well within where we've been at historically, then suddenly that 355 million bushel carryout figure, well, you're going to have to start rationing usage to keep that from dropping down to 100 to 150 million bushels, et cetera. So I guess I'm not just trying to be an eternal optimist on this, but looking at the riskiness of these numbers that the USDA projects, we're counting on trendline yields that the market's taking as the standard bearer going forward, not really assessing the risk of actually attaining that yet. Again, something that we only attained once in history last year, and projecting prices at just slightly higher than they were last year. So I guess, Shelby, in my view, when I look at these figures, that with their strong assumptions both for supply and for usage, and am more inclined to think that, hey, usage will hold up better because where industries are buying relatively low cost grains and oilseeds going forward. If usage holds up with this momentum we have, and have any type of a shortfall on the production side, we're in potential scenarios out into I guess April, May, June, July, where there's the potential for a fair amount of volatility in the markets. We're not looking at that yet at all in terms of where all that could go, but you can see a pathway out there where, yes, we have prices on the one hand, either prices just like we have if everything just goes well, no problem supply demand wise, but also a pathway where if we have any production problems come on at all, that you're shaving these ending stocks figures down to areas that in past history have led to pretty volatile and sometimes pretty high prices.
And as we continue to look at our Kansas crops, what are we seeing for prices?
Well, let me mention one last thing. For the wheat supply demand balance sheet, we also had those numbers, but no real major changes. That USDA projected $4.90 in this marketing year, $5 for the next. Really small changes. So for wheat, as we talk about prices and what's been happening, actually upfront lead futures for corn, for wheat, for soybeans are all not that far. Just within days of entering their delivery periods for the March contracts that they're in. And of those two, we've had really pretty strong futures. Prices for soybeans have jumped up on yesterday's closes to about $11.47. It wasn't that long ago that we were $1 lower, about again 2.5 weeks ago at 10.40. So that's positive. For wheat, we had jumped up as high as about 550, 555, closed yesterday at $5.51, and again had been higher than that of late. So for both soybeans and for wheat, actually, we've had some periods of pretty good price strength. And for corn futures, as you asked about that, we had gotten down to about 4.15 or so within the last month, last 3 weeks. As high in the last 2 months as about 4.55, 4.60, closed on Friday at 4.33 and a quarter. So it just seems like corn, it's not going downwards, but it hasn't shown the same strength as we'd seen before. And you stand back and look at the factors affecting things in the corn export market. Gosh, for the week ending February the 19th, we had 78 million bushels shipped. We need about 68, 69 to meet the USDA's projection. So that was really strong. Grain sorghum export figures for the week ending, again, February the 19th, 6.2 million bushels, need about 5.8, meet the USDA's projection. So for both of those, for the information that keeps coming into the market week by week, you've got some pretty good export numbers happening. Hard red winter wheat that we follow closely had a export week of about 4.3 million bushels, need about 5.8 to meet the USDA's projection. So we've been bouncing up and down on that. For soybeans, we've seen soybeans in the U.S. still at a decent rate, but the market anticipates all large supplies coming out of Brazil, and so we're pretty cautious about whether we can continue this price run up that we've seen on soybeans. So just interesting days to watch, Shelby.
Daniel, anything you're anticipating in the market?
At the end of March, we'll have the prospective plantings report. And that'll be important as a set of hard data for traders, for farmers and others to look at for price prospects. And we'll also have the quarterly stocks report, which anymore, I appreciate these supply demand balance sheets, but the real truth teller in these markets anymore are these stocks reports that they actually tell us how much has been used and or how many supplies gives us a hint of how many supplies we've had and whether our supply estimates are too high or too low. So, hey, we'll have the March 1st stocks report come out and be released at the end of the month. And again, these bits of information, when they come out, they have the potential to move the markets. Anybody still holding old crop grain from 25? We want to be awake coming into that week ahead of the end of March, just because of the potential for price volatility.
Daniel, I appreciate you taking the time to join us today.
Thank you, Shelby. Take care.
That was K-State grain economist Daniel O'Brien. We're cutting to a short break now, but stick around because we have more for you up ahead. You're tuned in to Agriculture Today, and we continue our show discussing managing and feeding cattle after a major loss, and in this case, discussing fire with K-State Extension beef cattle specialist Justin Waggoner. Justin, thanks for joining us today.
Thanks, Shelby.
Justin, when I'm thinking about animal care, the first thing that usually pops to my mind, water, and how might this be being navigated?
Yeah, sure. So after any type of natural disaster, fire, anything that really damages infrastructure, I think that watering cattle especially can become a challenge. More so maybe here in western Kansas or southwest Kansas, we are very heavily reliant on groundwater resources. And so oftentimes that means we're going to involve some sort of well or pump or, a solar well might be utilized to water cattle. And so oftentimes in the case of a wildfire, what happens is that infrastructure is damaged. And so that certainly can be a challenge. And as we think about providing for the needs of just livestock, cattle, any cattle after any type of natural disaster, water is always a first priority, especially during those initial hours and days after the event.
Do sometimes the tanks need to be washed out potentially?
One of the things I think we take for granted sometimes is, if you haven't experienced a wildfire, you're really not familiar with how much ash and soil and just, there's a lot of things that go along with that. Ash can be toxic, right, in water tanks. So there's some components there. I mean, one of the first things, especially if we've gone through a wildfire event, if we've got some existing tanks, it can always be a good idea to, really take some extra time, clean those water tanks, just because of, we just don't know what contaminants might be in that ash component if those tanks were on site at the time of the fire.
What else do you recommend cattle producers assess after the unfortunate prairie fire?
I like to break the response down really into two phases, if you will. So, kind of there's this initial assessment phase where this is the first 2 to 3 days, maybe a week after the event, depending on the scale and the magnitude of it. We're really kind of coming in and assessing those losses. We're still, gathering up livestock that have went through the fire in this example. So, and that's more about just survival needs. So water is essential. We want to try to get some hay in front of those cattle as soon as possible. Oftentimes intake's very low. It's a very high stress situation. So a lot of times we're very, the first thing is just to get some hay in front of those cattle in terms of that survival phase, right? So, but then to highlight this a little bit more, oftentimes what happens is after that initial phase, we go into a much more longer phase, right? Where we've many times it's common for producers to take cattle in a wildfire situation and relocate those cattle. We may ship them to a different location that has resources. We may move them to a dry lot scenario, relocate the cattle, right? In some cases, we're not necessarily able to do that. And so that really creates a situation where we've got to maintain some of those cattle in place with very limited resources. And so this maintenance phase is much longer. And if we think about it for a spring fire like we've had here, in many cases, those damaged rangelands that have burned, we're not actually going to be able to graze those rangelands for maybe 60 to 90 days in some of these resources. So we've got this extended maintenance phase where really we're still going to have to maintain those livestock that are going to be in place. There's a variety of, we may relocate them to wheat pasture, we may place them in a dry lot, other areas of the ranch or facility that maybe didn't burn, but most likely we're going to be doing some supplemental feeding. Hay is, oftentimes donated resources come in. And so how we strategically utilize those resources in relationship to cattle requirements, I do want to highlight that's maybe one of the challenges of this time of year for producers, especially for a spring calving herd. We're right on the verge of, calving season. We're doing heifer development programs. We have very high nutrient requirements. And so there's a, very intensive time, especially for a spring calving herd. So maintaining those cow requirements, but also being sensitive to, we don't want to have long-term consequences, right? In terms of downstream, if we lose too much body condition on those cows, and what's that going to do to subsequent reproduction rates next spring? So we certainly have to be sensitive to this as we look into this maintenance phase of providing those cattle with more of their nutrients, maybe being delivered from, donated hay resources or other feedstuffs, if you will.
When we think about those hay resources, that hay could be a lot of different types. And so how could a producer maybe figure out how that fits into their ration to provide all the needs for their cattle?
Yeah, certainly, I think all donated feedstuffs are always appreciated. And I think our ranching community and producers in the ag community are very, very generous. We often, see that the hay trucks rolling in. And so the donated hay resources that come in, there's a wide range of forages. Some of them may be fairly common. Some may come from other differences away. It might be for forages that we're maybe unfamiliar with in some instances. So, my recommendation in terms of just allocating those forages and as producers see them come in is to actually place those forages and think about those hays as they're coming in, really kind of into four categories, if you will, that are somewhat related to cattle requirements. So really the first category that I use is low quality hays. This forage contains, less than 7% crude protein, mature grass hays, crop residues, et cetera. Those would be really common forages within this category. Those are actually a very good replacement for like dormant native range. So you think about that forage base that many of those cows would have been grazing, those forages would be a fairly comparable replacement for that. The next category is what I call the moderate quality hays. So these are forages that are a little higher in terms of their crude protein content and just overall general quality. I think about brome grass, cool season grass hays, cereal grains, wheat hay, those type of forages would typically fall within that category. As we think about cows that may have calved, that may have higher nutrient requirements, those forages would be a good fit for those particular animals. And then we get into two additional categories: the higher quality hays. Really high quality alfalfa. It's not, very readily available. Oftentimes that comes in. Well, those are forages that, because of the nutrient density of them, we can really blend those with some of those other forages. By themselves, they would greatly exceed the requirements of many of our animals. So we can use them as a supplement. We may not necessarily need to feed, a diet that's 100% of this high quality alfalfa, but we might be able to blend it with some of those lower quality grass hays in an appropriate feeding rate to balance cow requirements. The other forages that will come in will be some that, this is maybe higher risk forages is the category that I put in. Maybe these are forages that might be known nitrate accumulators that we may want to get some additional information before we feed that. Especially as, back to my earlier comments, we certainly want to be sensitive to any negative downstream, outcomes. And so just those forages, if we know they might have some potential issues in terms of nitrates, it's always good to get that information up front to kind of know how we might best utilize. A lot of times we can still utilize those feedstuffs. We simply just need to dilute out those if there's any concentration of nitrates or anything else that might appear in those forages. So, I think that's the overlap there between cow nutrient requirements and the relative categories of hay quality that producers can think about in terms of strategically utilizing some of those forage resources.
So for cattle producers, what are some options when it comes to feeding programs that could still help their cattle meet all the requirements?
Yeah, that's a good question, Shelby. So, this is a great opportunity to really have another application for limit fed programs. Oftentimes that's where we increase the energy or the nutrient density of the ration of the diet that we'd feed to these cattle by utilizing concentrates or byproduct feedstuffs. And so what we can do is we may not be able to feed as much forage because of the limitation, but we can replace some of that with a byproduct type feedstuff or a concentrate and greatly reduce the amount of forages. So essentially, we're feeding those animals at maybe 2% of their body weight, but it's in a very nutrient dense package. So we don't necessarily need to put those animals on full feed or be as heavily reliant on those forage resources that are coming in. So that can be another option as we look at producers feeding cattle through this more extended maintenance phase, if you will.
Is there another option as well?
There's a lot of different programs that can be, tailored. I would really encourage producers that are out there to work with a nutritionist or an extension professional like myself. If they have those questions, if they've got resources coming in, how do we best manage these resources that are coming in to maximize, just because they're so limited right now for many of those producers.
As we're thinking about the people that were affected by these fires, what are some things that can help support them, hopefully return to what will be their normal?
I think it's always just important to recognize that this maintenance phase for many of these operations is going to be much longer. As we mentioned earlier, 60 to 90 days until we can maybe get the opportunity to graze some of these pastures again, pending rainfall and recovery rates, right? And so I think keeping those donations of forages coming in addition to that, I think cash flow, we know in the agricultural community, cash flow is often a challenge just under normal circumstances. And so there are always some needs that are out there that are not going to be covered by insurance. You think about veterinary expenses. I think that's where those donations and that emphasis in both feedstuffs as well as cash resources to help producers along can really be helpful until we can to return to normal, as you put it.
Justin, I appreciate you taking the time to join us today.
Thanks, Shelby.
That was K-State Extension Beef Cattle Specialist Justin Waggoner. We're cutting to a short break now, but stick around because we have more for you up ahead. You're tuned in to Agriculture Today, and we conclude our Friday show with the weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, in this past week, have parts of Kansas seen some precipitation?
Yeah, we had a little bit of snow over the weekend, as much as 2 inches there from the Hayes corridor, around that Hayes corridor, kind of east-west along I-70. Then it tapered off as you got further east and you got further south, with just a trace for a lot of folks. It's not too late in the year to see snowfall. It's not necessarily what people want to see. We've had some big temperature swings as a result. And, once we have 70, 80 degrees, like many folks saw the week before last, snow's the last thing on their mind. But we're still, it's Kansas spring, and we're going to get these swings. It's pretty common. And it probably sets the stage for what's about to come in the next few weeks. But precipitation overall didn't amount to a lot of liquid. Unfortunately, we did have a couple. I'd be remiss to not mention too. We did have some showers and even a few thunderstorms with the cold front we saw Wednesday night. But overall, most of the state was below average precipitation wise, with less than just a couple hundredths of an inch. When we look at normals for this time of year, we should be seeing as much as about a half inch in the southeast and about a quarter to a tenth of an inch in far western Kansas. So our average precipitation is on the increase. as we get later into spring. But unfortunately, we're not quite seeing that just yet in reality. We're not seeing the average. So we actually had drought expansion this week, especially along the southern corridor, along the Oklahoma border. And now we're starting to see moderate drought start to creep in as well, with only about 60% of the state drought free. And it's that island of drought free conditions that's getting smaller again this week with the expansion of abnormally dry and moderate drought in southern Kansas.
But are we going to see any precipitation as we look into this next week?
A big pattern change is going to be underway for the state. Starting this weekend, we got a really impressive cold front that's going to come through on Saturday night into Sunday. And it's going to bring some chances of moisture, especially for the eastern half of the state, eastern third of the state probably. There might even be some snow again. We could see some snow in far northeast Kansas. However, a lot of uncertainty on if it's going to be snow or sleet or even some freezing rain potential. But when we look at the quantitative precipitation forecast for the state, big change is underway with another stronger system expected around that Tuesday timeframe. Then again, another one later next week. These are going to bring influxes of moisture, especially for eastern Kansas, where we could see the potential for as much as 3 or 4 inches of rain in far southeast Kansas. But unfortunately, as you get west, those amounts are going to drop off. It looks like central Kansas is going to be the battleground area where there's a potential for a sharp cutoff in precipitation. And then western Kansas might not see any. So we're watching the system and systems carefully. I think it's going to set the stage for kind of what happens the rest of spring. We weren't expecting this big of an influx of moisture, but it's going to not just hit Kansas. It's also going to hit south of Kansas and Oklahoma and Texas. And those are areas which are under worse drought conditions. And as we look of trying to get moisture influx later in spring, we need to saturate those grounds to our south, because the dry ground is not very good at transporting moisture over top of it and getting that Gulf moisture northward that brings us those late spring and early summer rain. So this storm system itself is going to, these couple of storm systems are going to set the stage for maybe giving us some positive reinforcement to offset some of the dryness that we were originally thinking would run the course. And then, when we look at average precipitation is increasing every week through March. And as March comes in potentially like a line, that's going to hopefully be enough to at least give us average precipitation for some parts of the state for the entire month. Whereas before we were thinking it was originally going to be dry.
Chip, I appreciate you taking the time to join us today.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.